Thoughts?
I think if I followed very well, we have to recognize it at
10 years.
the amortized cost of 10 years.
10 years. Okay. So this question said discuss. So you say 10 years. Can you give me a reason why?
I think because the other five expected 5 years is also given, if I'm not wrong.
Okay. It's expected to be, you're expected to be given the additional 5 years. But also, look, we're looking at example A. The cost of renewing the license is also important. The cost of renewing the license in this instance is $1,000. So let us go and look at it for 11A. The legal life of the license is 5 years, but we must also consider the fact that the legal rights are renewable. The rights are renewable at an insignificant cost. 1,000 versus the 100,000 original cost. So if they were buying a new license, they would have had to pay 100,000, right? But since they're renewing, they only have to pay 1,000. And it says, and there's evidence that the rights would be renewed since the renewal is necessary for the continuation of the business, and the government has indicated that it would be renewed. Thus, we amortize this asset over the 10-year useful life. All right. The important thing to know for this question is that you were granted a renewable period of additional 5 years from the initial 5 years. The government has indicated that they will renew, and the renewal is insignificant in relation to the cost of a new license. So these are the reasons that this intangible asset must be amortized over a period of 10 years, and the useful life of this intangible asset would be 10 years. All right. Now let us look at it. Yes, go ahead.
I have a question. When we are going to calculate the depreciation, are we going to add 1,000 to 100,000 and we divide it with 10 years?
Okay, so we are going to look at that, and this question will be answered exactly in scenario B.
Okay, so
Okay,
thank you.
all right. So let us look at scenario B. The cost of renewing the license is 70,000. What happens in this instance? The cost of renewing the license is 70,000. Okay, did someone want to answer? That was loud. Okay, let us just go and read through it here. Okay. The renewal, the legal life of the license was being B, where the cost of renewing the license is 7B. The legal life of the license is 5 years. But we must also consider the fact that the legal rights are renewable. Since the rights are renewable at a significant cost, which is 70,000, that's a significant portion of the original cost of 100,000. We disregard the renewable period. The asset must be amortized over a 5-year period. Okay. The renewed license, if and when is acquired, it must be treated as a separate asset, and it must be amortized over a useful life of 5 years. All right. So the important thing here that we note is because in the second instance that the renewal cost is significant, it's 70,000 compared to the original 100,000. So it's 70% of the cost of actually getting a new license. In the second instance, you do not consider that the new period would be you do not consider that the new period will be part of the old intangible asset. You consider it as a new intangible asset which must be amortized over a period of 5 years. Okay. So what about now, in the first instance, the question that was asked, what should be the cost of the intangible asset? What should be the cost of the intangible asset? For the first instance, would the cost of the intangible asset be 100,000 or would it be 101,000? Can anyone tell me what you think the cost would be? Maybe I should go to the theory. What do you think the cost of the intangible asset should be? Should it be 100,000 or should it be 101,000?
I think it should be 101,000.
Okay, why do you think it should be 101,000? Why do you think it should be 101,000? Okay. If you look at the initial cost of the license, which is 100,000, that is only valid for a period of 5 years, isn't it? But we are saying that that intangible asset must actually, that broadcast license must actually have a useful life over 10 years because we expect it to be renewed, isn't it? So we're going to amortize it over 10 years. And since we know the cost of renewing the license is 101,000, then we should include the 101,000 and we're going to, the 1,000, sorry. So we'll have a total of 101,000 and then we'll amortize it over the 10-year useful life. All right. Hello, are you there?
Yes, sir. It's clear.
Okay.
Yes, sir.
All right. But then the question comes then, how will you recognize this intangible asset? At initial recognition, what happens to the capitalization? Of the intangible asset? When does capitalization stop?
After start using the
Okay. Not after when, well, it's not after you start using it, but when it's available for use.
for you.
When it's available for use. But if you look at this instance, when is this asset available for use? Or maybe I should put it this way. With both the broadcast license, we've paid 100,000. What about the additional 1,000 that is there?
It should be capitalized to the initial cost levy.
But have you incurred it yet?
No.
Okay, now 1,000 is not yet incurred. So what then is your journal entry at the beginning? To recognize your intangible asset, what is your journal entry?
Intangible asset, which is the license, the broadcasting license, and bank
How much?
100,000.
100,000. Okay, but then if you have that journal entry, then what I previously said, where you're going to use 101,000 will be incorrect. So which is the correct way now to do it? What is the correct way to do it? What do you think is the correct way to do it?
Maybe it's to record the journal entry that I just said, and then make a provision for the 1,000 that we are gonna incur.
Okay, one person says we make a provision. Okay. Anyone else? Anyone else have an opinion on what you do with the 1,000? I want you to think like really like if this was real life, then what would you do? What would you do with the 1,000? So there's one option of making a provision.
Okay, okay, she must
Okay.
continue.
Okay, there's a lady. The lady can go first, and then the gentleman will go after. All right. Go ahead. Yes, go.
In this example, what I did first was I treated the 1,000 as a sort of residual value, and then it's 100,000 minus 1,000. I still don't understand why it's been incorrect.
You still don't understand why?
Why that would be incorrect if I treat the 1,000 as a sort of residual value, since at the end of 5 years it is guaranteed that they will renew.
Okay, so we have to go back to the definition of residual value. Residual value is the amount that you can dispose of an asset at the end of its useful life. So we are not disposing the asset. In fact, in this instance, we actually have to pay more for an additional 5 years. You have to pay $1,000 more. So this cannot be a residual value. So just think residual value, that's the value that you dispose of the asset at the end of its useful life. So we're not disposing in this instance, we're actually renewing it, extending it for a further 5 years, and you're going to pay 1,000 to get that additional 5 years. Okay. There was a gentleman that wanted to
Okay, I
answer.
think let me just speak under correction. At first we were to capitalize the 100,000.
Yes.
I think the second one we also have to capitalize the 1,000. We
Okay.
debit intangible asset and then we credit. Then I don't know.
Okay, so but then when do you capitalize that additional 1,000? Is it at the end of 5 years or is it at initial date when you get the broadcasting license?
Okay, since we are adding the 2 5 years together, maybe at the initial, at the beginning.
Okay, but now my question would be with the journal entry, what has happened? Have you paid for that 1,000?
No, you haven't yet.
You haven't yet paid for it? Is there liability? Do you owe it? Is there liability at that point in time? So look at the definition of a liability, a present obligation, right? a present obligation as a result of a past event. Is there a present obligation? A present obligation at the initial 5-year period to transfer an economic resource as a result of a past event. That's the definition of liability. So at the initial date, there's no present obligation because at the end of 5 years, you can decide not to renew it, right? So you don't have a present obligation. And then we go to the previous person that said maybe you will take a provision. Now, what's a provision? A provision is just a liability, but of an uncertain timing or amount, right? So I want you to think of this question and to discuss it, all right? And then come up with something that you think should be done, how this would be treated as. Okay, so there's an option of treating it as a provision. We say that we cannot count it as a residual value because this is not an amount that we're going to receive at the end of the useful life. And there's an option of capitalizing the 1,000 to the initial value. All right. There's also an option of expensing it. You can also expense the $1,000. So I just want you to think about this. Okay. And you can discuss it and we'll deal with it. So, because I want you to go through all the steps. What happens at initial recognition, you know? What happens afterwards? What happens at amortization? What will be the amortization that will actually calculate per year, you know? Okay, are we together? Then we'll just discuss that tomorrow. Are we okay with that?
Yes, yeah, we are fine.
Okay,
Yes,
let us do. Okay, great. So let us now deal with this last one, subsequent measurement. We have two models that you're going to use. So there's the cost model and there's the revaluation model. All right. So typically would probably use the cost model because normally for the intangible asset, like if there's no active market, then we will not be able to usually determine a new fair value. And normally when we revalue an asset, we have to revalue it to its fair value. So we'll normally use the cost model, which is the cost model, less accumulated amortization and accumulated impairment losses. That gives you the carrying amount. All right, so this cost model is the same as the same model under property, plant, and equipment. The valuation model is similar, but we are going to use the cost model. We are going to concentrate on using the cost model for this course, so you do not have to really worry about the revaluation model. Okay, derecognition. When you derecognize an intangible asset, you derecognize it on disposal or when there's no future economic benefits expected from its use or disposal. This is the same derecognition criteria that we have for other assets, so I will not go into it. Presentation, how to present intangible assets as one line item, in the statement of financial position. In the statement of financial or profit or loss, you will obviously show your amortization expense. Now for disclosure, how do you disclose intangible assets? You should distinguish between internally generated intangible assets and other intangible assets. All right. And for the accounting policy, you can also use the useful life. Where the useful lives are indefinite, finite, and infinite, they're useful lives, all right? Accounting policy, you look at your measurement basis of carrying amount. Are you using the cost model? Are you using the evaluation model? The amortization method, is it the straight line method? Is it the production units method, amortization rates? All of that would be included in your accounting policy. Okay, so what is your intangible asset note? So you're just reconciling the cost price and accumulated amortization and the carrying amount at the beginning of the period to the carrying amount at the end of the period. So this note looks exactly like a PPE note, looks like an investment property note. You're going to show any acquisitions, any disposals, any impairment losses that were recognized or reversed. You're going to show any amortization. All right. So I want to show you this page 500, which shows us how to disclose the intangible asset note. Okay, let us go and look at that. Let me just scroll down this. Okay. And you must go through the examples in your textbook. Okay. So as I mentioned, intangible assets are shown as one line item under non-current assets. Okay, we will not really look at the statement of changes in equity. Okay. So we have accounting policy notes that just describe how the intangible assets should be amortized. Okay. So now the important thing that you have here in your intangible asset note, we can see in this example there are three intangible assets. You have a patent, you have development costs, you have the license costs. All right. So obviously in this instance you have 2 years. You always show the comparative amounts, but for our purposes, we will not really show the comparative amounts. We can just start looking at from that point in time where you have your net carrying amount at the beginning. All right. You have your additions, your disposals, impairment losses, revaluations, increases and decreases, amortization, etc. And you get the amount at the end of the period. What I want to illustrate is that for each intangible asset, you show it separately. So you have patent, development, and your license. Those are your intangible assets that you show separately. Now, what happened in your test, for instance, the one that we did on PPE, you had two assets. I think there was land and then there was a plant, a manufacturing plant. And what a lot of students did is that for the manufacturing plant, it was split between different components. And that is incorrect because the manufacturing plant is one asset. It must just be shown as one asset. So each specific asset is not split like into different components. All right. So for PPE, you shouldn't have split it into different components. For intangible assets, it's exactly the same. You show your patents. So let us say you have patents that you bought and you had patents that were internally generated or internally developed. You will show those two separately. You'll show the patents that you acquired separately from the patents that were internally generated. All right. So that is one of the main things relating to the intangible assets. Do you have any questions? Are there any questions? Okay, maybe the other one that we can just deal with is a profit before tax note. You will always see that it's talking about a profit before tax note. So remember the profit before tax note, we just show significant expenses that relate to that particular asset. All right. So we've done PPE things like depreciation. You will show things like any impairment losses. You will show in the intangible in the profit before tax note. If you're doing revaluations, any revaluation surpluses, you would show revaluation deficits, etc. You will show. So profit before tax note, although we might not really go into depth with the profit before tax note, you can just take note and just think of the significant expenses that relate to that particular asset. And then those are the items that will be shown in the profit before tax note. So for intangible asset, we'll look at research and development costs that are expensed, amortization, obviously, impairment losses, reversals of previous impairment losses. Okay. Is that fine? Okay, I guess it's fine. So what I want us to do tomorrow, we'll just have a revision class where it's not really a class. So I will come, and if you have questions, then you can pose your questions to me. All right, you can pose your questions on the tests. So obviously we'll deal with investment property. Intangible assets, just a small question because even the other classes, they haven't really gone far. So the bulk of the test will be investment property. We'll have a small question on intangible assets. All right, but the bulk of the test will obviously be investment property. And obviously, when we're talking about investment property, it doesn't mean that you cannot have PPE, because what if there's a change in use? Property changes from, let's say, PPE to investment property, or it changes from inventories to investment property. So you just also have to note what you've learned from your PPE. Okay. And your test,